Hey guys, welcome to another video. So I wanted to make trading as simple as possible. Um, I hear the same excuse from my friends saying that, yeah, I want to get into trading, but it just seems so complicated. Well, I'm gonna help you guys with that problem. It is not as complicated as it seems. I've made actually a slideshow to go through and try to put it into simplest terms. It really isn't that complicated. If you were able to pass high school, shit, if you were able to pass elementary school, you'll have no problem trading. It is not that complicated. It's just a matter of putting the work in and learning it. And I'm going to put it as simple as I can, try to explain it as best as I can. And ultimately, to be a successful trader is it's up here. It's not necessarily learning strategy or whatever it is. It's definitely psychology related, uh, which we'll go into it. So let's first learn. So yeah, I've been working on this. I'm just quickly show it. Put a lot of work into this. You can make this for yourself. Take a good look at it, make it for yourself. But this is what I use to record my trades, and it's really helped me journaling my trades. You need to see your mistakes and learn from them to be able to continue to to get better. And also having something to look back on is great. You get to see your progress. See, oh, maybe I made this mistake before. Let me go back and check. And this calendar right here is where I have all my trades. You can see here I have my own personal one. I've made one. I'm thinking because I put so much work into it, I might sell it. I want to make it really affordable, so we'll do a sale or whatever, something like that for the first, I don't know, 150 people that get into it. But yeah, you can see here my own calendar. This goes back at this point. I think it's at least a year of information on this calendar. We can see I haven't traded all week. I've been busy with other stuff and actually working on that page that I was just showing you guys. So I just removed all the personal stuff. You can make your own reason why and all that stuff, but it has a lot of the same information. If anything, I've actually added some stuff to this one to make it a lot better for beginners. Anyways, let's actually get into the trading of what I'm talking about. All this will be linked in at least this one. I will link this one for free, the slideshow for sure. This is just screenshots off of Google that I just want to go through. Um, but yeah, this one 100% will be linked. I'm not going to charge anybody for learning something as basic as this. If anything, what I'm charging for is the format of actually having to put all this together, all this information. I mean, this stuff is years of stuff that I put together and put it will make sense to me in a form that makes sense to me. Just compiled it together. But I mean, ultimately, if you want to go through the work of doing it yourself, go for it. Like I did that because I didn't want to pay, but also everybody was like charging 120, 100 or more for something, and I was like, yeah, I don't got that kind of money. That's why I'm trying to get into trading. So, yeah, I want to make it as if I am going to charge, I'm going to make it extremely affordable. So, yeah, let's start here off the beginning. Order blocks. So, yeah, it's extremely simple. This is like SMC, which is just smart money concepts. It's just a way to call a strategy, basically, and it's just a way of technical analysis, as we stated here, of just charting. If you're trading, I do want to make something for investments, but this is just if you are trying to trade. Um, this is something for technical analysis. So here we go. It's straightforward. An indecision candle here, which just means like we can see this little candle. It hasn't decided where it's want to go, and then there's an engulfing candle, which means one that's as the name states, it's engulfing the other candle. Uh, so yeah, this is a valid one because we can see it did not take the liquidity on this side, and in this instance, this one's valid, this one isn't, right? Liquidity, I guess I should explain that. I didn't or put into this. Liquidity is just the money, the orders that are put in. So we're talking about real quick. We're going to talk about like currencies, which is usually what you want to trade if you're getting into it. Euro USD is usually the most traded one. Uh, if you're trying to just trade Euro USD, it's the euro versus the US dollar. Pretty straightforward, right? You're trading the conversion rate between those two is what you're trading. So there's banks, trillions of dollars that are being moved around every single day. And if you go to for example, if you go to your bank and you're going on vacation or something, you want some euro dollars for me. I'm Canadian, so I'd go in and be like, hey, I have $100 of Canadian, give me whatever that is in euros, and based on the exchange rate at the time in that certain moment, they're going to give me whatever it is. So like today, for example, I don't know what the current. Actually, let's quickly look at that euro to Canadian. And this is also something you can trade. There's just not as much volume, so I like to trade something with more volume because it tends to be the more volume it is, the more clean price action moves. Ultimately, what you're trading against is yeah, like the banks are moving around, but it's not like yes, there's going to be people involved that are putting in orders and stuff, but ultimately it's just an algorithm. We're living in that age where excuse me, a lot of stuff is algorithmed, so I don't know if that's a word. Is that right? Is that a word? But yeah, you're trading against an algorithm. So yeah, regardless. So for let's say for $1, I'm getting what? Why did it do that? I'm getting 67 cents of euro. Okay, so there we go. We can see it fluctuates, right? So you're trading those fluctuations. Right here, if you're euro against the Canadian dollar, uh, it's be bullish. So yeah. Anyways, let's get out of there. But hopefully that makes sense. There's tons of money being moved around. It's a very liquid market, which means it's moving up and down constantly. Trillions of dollars are being exchanged in milliseconds, and the charts are just showing you that in a format. In this example, candlesticks. You can make it lines. I'll actually quickly. Actually, no, I'll show that later. But you can make it lines. You don't have to. It makes it easier for technical analysis in the way I trade to use this. But honestly, you could literally be trading off of charts. I mean, off of lines. You don't need to be looking and figuring out all these candlestick formats and all that stuff. A lot of people go into details of like, and I'll actually have that linked if you guys want, about learning all the candlesticks formations. Honestly, I have like barely ever used that. It's really not essential. If that's something that you want to get into and whatever, that's great. But for me, I realized in my trading journey, the hard way, that simple is better for me. I don't like to overcomplicate this thing. And you might be like, oh, this is complicated. It's not. Like, this is very straightforward. It does not take that long to learn. And if you are somebody that's more analytical and want to get more into details and stuff like that, then this video is not for you because I'm definitely not that type of person. But yeah, anyways, we're just gonna go over through the simple stuff. So we can see here supply and demand. You hear that? That's a very common use strategy. It's very straightforward. For example, here, I mean, it doesn't take a scientist. This is literally like kinder. Are you smarter than a fifth grader? Like, I don't think I would do that well on that fifth grader thing, to be honest. I think a fifth grader would beat me. But like, this is like what, like I think a third grader could learn this. Third grade seems, what are you, like 8 in third grade? Am I right? I don't know. Whatever. But we can see here, this is the demand zone. So it's kind of the similar thing as here as an order block. They're not exactly the same, but they're very similar. There's an indecision candle. You can see that price has reacted off of this. So you're just painting yourself a picture ultimately. You can see here, this is a supply zone, origin of explosive move, exactly as it points out here. So price reacted to this. So right here, we can see there, all this candlesticks here means something, price reacted to it. Right here, price tapped into that area, that price area, and then acted off of it. So that, and basically you're just like, hey, this has happened in the past. I'm predicting the probability of it reacting again to this area is probably going to happen. That's trading. There's no exact 100% science on like this is going to work out every single time. It's just like, hey, these candles are telling me it's acted like this before. I'm guessing that it might happen again, and off of that guess, I might be profitable. Yeah, there's a win rate that actually that's. I know I'm like really slowly going through that, but this is going to explain why. Yeah, right here, perfect win rate right here. Okay, so if you're trading this, I did not know. People made it seem like when I was watching videos, it made it seem like, oh, I need to be getting 20 to 1 R's to be a profitable trader and be good. Like, no, you don't. Look at this, 1 to 1. So if you're risking $100 to make, or oh my gosh, I'm trying to make $100 and I'm risking $100. So like, yeah, worst case, I lose $100 to make $100. You only need to be right 60% of the time. 60% of the time to be profitable. 2 to 1 R. So I'm risking $100 to make $200. You only need to be right 40% of the time, Flip of a coin, 50%, right? And the probability. Less than that if you're aiming for 200 versus 100 in this example, 2 to 1 R. That is extremely doable, The thing that comes into play where people mess up, me included, is your emotions. You start to see, hey, I'm losing money, your emotions come into play. There's a lot of stuff, and I do have a whole document that goes through rules that I set for myself that help with my psychology and ultimately have helped me. But the biggest thing and the reason why I took a break from trading was like I realized, hey, like there's too much going on in my personal life. It's starting to affect the way I chart or the way I'm trading. I'm becoming emotional. It's affecting the way I'm entering trades. The way I'm exiting them. All this, like ultimately, risk management is what's going to make you profitable. The strategy, yeah, it's important, but it's not as important as risk management and how you're dealing with that. So, like I said, you could literally be trading off of lines, and if you only write 40% of the time with a 2 to 1 R, you can be a profitable trader. So yeah, I think people don't take that into account a lot of the time, and yeah. Anyways, here's what we're gonna continue to go through, so I can explain my trading strategy. But again, you can take it however you want and learn for yourself. And balance here, I mean, extremely simple. There's literally, as the name states, it's an imbalance. We can see here that there's a you know a gap in price right here. The wicks, you know, big big. I don't know how to explain it simpler. There's a balance in price, right? Fair value gap is basically the same thing as an imbalance. You can see here, fair value gap. Uh, yeah. Fib retracement. Let's search this up because I know there's somebody that behind this. Fib retracement. Oh, okay. I completely messed that up. Retracement explained. Here we go. Um. Okay, I thought it would explain the science or the math behind it. Basically, the universe works in a certain way, in a mathematical thing that, you know, because we are trading against algorithms a lot of the time, price tends to, not always, again, it's not an exact science. It tends to come back in a retracement before continuing up. And I like to think of it as like price needs to refuel before continuing its move. Uh, Depending on like the news and the momentum, obviously that's not always the case where it needs to come back. But a lot of the time, especially if you're looking on the smaller time frames, price is gonna, we can see here, swing low, swing high. You'd mark it out. So let's just say the previous day low. So that means, you know, literally as I'm stating it, like let's say we're looking at Euro USD. So the lowest point the price was versus the highest point it was. And you would chart out, here you go. If you're expecting it to retrace and continue going up, you go from the previous day low, you swing down, chart that up to then the top of, oh, sorry, right here. So swing high, the top of the previous day high. And if you're expecting it to continue and it makes sense to you based off the news, whatever's going on in the market, you think it would continue that. The golden zone, as we can see here, I don't, it's saying here the 38. I don't use anything lower than the 50. Me personal experience. I want to get price at a discount. If we're using premium and discount, which is something I'll go later on. But basically, it's the same thing. If you're buying something, what do you want to do? You want to get it at a discount, right? So I don't want to pay for a premium of something when I can get it at a discount. And that increases your risk to reward as well. So sometimes if I'm trying to be aggressive with an entry, yeah, I'll pay a little bit of a premium. But ultimately, a lot of the time, I'd like to have a retrace. And if you've watched any of my trades, it's something I use all the time. I want to get a discount. That's me in my personal life. You can see here in the background. I actually just bought a game called Solstice. It's actually quite fun. It's like Claymore and Berserk combined. It's cool, and I got it at a discount. I don't buy games. I'm not gonna pay $90 for games anymore. Like that's insane to me. I don't buy games full price. I'm wait for it to go on sale and then I'll buy it. Anyways, uh, yeah, I'm a cheap ass, but hey, whatever. So we have here, yeah, the golden zone 50 to 68. So this price, we can see usually price reacts to one of these levels. It doesn't always, but if you go and test it for yourself, you're going to see a lot of the time price does come back and react off these certain levels. This is an algorithm that you're fighting against. Ultimately, it's quite depressing, but it's true. And it took me hard hard lessons, some few a lot of mistakes to realize, hey, like I'm the peasant in this situation. Like I'm the pawn or whatever. If we're talking like chess terms, like like I'm garbage. Like they don't care about me. I'm a tiny little speck, in the liquidity. If we're talking about trillions of dollars, you think they're gonna care about your like $100 little entry or $10 or $50 or $1,000? Obviously, if you're trading like $1 million now, you start to pop up on these algorithms and stuff like that. You're starting to be more liquidity that they want to hunt. But ultimately, a lot of retail, they know how we trade. There's algorithms like AIs and all this stuff now that we're trading against. Um, but we're only trying to get a piece of the pie, right? Like that's why ultimately you want to be trading with the trend, with the big dogs. Um, so your probability is more in your favor. But yeah, uh, yeah, okay. Anyways, here's a break structure. So yeah, we can see here breaks previous highs. So it's just a continuation of the same momentum, the same side, and then change of character as stated. Like it's pretty self-explanatory. A lot of this stuff is just like, the abbreviations make it like, oh no, like what is he saying? BOS? What the hell is that? But it's like break a structure. Prices breaking, continuing to break to the upside. Change of character. Now it's went from bullish to bearish. RSI is a tool that you can use with. Most people use this with stocks. I don't trade stocks as much. You need depending on what your counter you're trading, you need more money. I also just like the way Forex moves, and indices are easier to trade, in my opinion. Uh, Also, like prop firm challenges and a lot of that stuff where you can borrow somebody's money. And those indices, they don't, I don't think a lot, I don't know of any actually that allow you to trade stocks. So yeah, anyways, there's a lot of money going around with currencies, and you can kind of learn the ways each currency had kind of, or industry has kind of their way they like to move. Stocks are kind of similar, but if you're going to play stocks, a lot of the time people do options because then you have more leverage. I think that's a big part of it. Is like, with stocks, I'm only going to buy one share, and like if it moves up a dollar, I'm going to make a dollar, right? Yeah, whatever. We're just going to say the stock's at $1 and it moves up $1, and I bought one share. I make $1, right? But with Forex and indices, it makes it more riskier. But if you're smart and you're risking less, that's why risk management is so important. I could risk 1% of my account. So let's say I have $100, I'm only risking one. So, but I could have 100 to one leverage, meaning if it moved up 100 points, I think that's what it means. Don't quote me on this. Actually, don't. I'm a little autistic sometimes. I don't know how I'm saying this. Like I said, I wasn't very good at math. But regardless, the leverage 100 to one means that your $1 is. I think it means your $1 is worth like actually like $100. Um, Obviously, like if it moves against you, it's also same reverse effect where you can lose a lot more money. But in this instance, you'd be like stopped out. Like I've had it where you blow accounts, um, because you're using margin, which is leverage. Same thing. This is getting more into maybe more complicated stuff that I'm maybe not explaining the best. I would have to like draw it out or find better ways. But hopefully that didn't confuse too much people. But basically, yeah, that's why you can trade forex and indices and stuff like that is because you're using leverage. It's giving you, you know, you don't. The platforms allow you to get more money. Like I don't if I'm trading $10, I can't really do much with that when I'm trading stocks. But if you're trading, currencies or forex, I mean, you have to be pretty lucky and good trader, but you can, trade that or multiply that money a lot faster. It's a similar thing with options. If you're trading options, uh, contracts and stuff like that. Yeah, well, let's let's not get too complicated. But uh, all those things again, those things are also simple, but I'm just not great at breaking down those things. Anyways, let's continue with this. Premium discounts. That's what I talked about up here with fib. So yeah, I'm trying to get it in a discount. We can see here. If you're just off of this leg and this little leg here, this little pyramid or whatever, um, triangle, whatever you want to call it. You're trying to get it at a discount, right? If you're going to go up, equal lows, equal highs, literally as it says, we can see here, equal highs. Price, as shown in this one, price usually wants to, come back and take that liquidity before moving up. It uses, liquidity, money to then push it back up, right? Um, Indecision candles, some uh, candlestick patterns. I didn't want to include too much, but this one is, it's relevant to the order blocks. So that's why I included this. We can see here, I like to go for this. Me personally, this is to me, when I see these, the spinning tops, along with, a candle like this, an engulfing one, those to me are like the cleanest order blocks. I love seeing those, but that doesn't necessarily mean that these are invalid and not order blocks. These are also order blocks, but again, I like to keep it simple. I think you could probably tell by now I'm a little, you know, although something's up there is maybe a little slow or whatever. So that's that's why I like to keep it simple. Anyways, resistance. You can see here again, self-explanatory. Price comes up and rejects off it several times, reacts off it several times, meaning that like literally it's acting as resistance this area for whatever reason. And then we can see here several times it touches this area, so now that's support. ICT kill zones. So these are just like mark. These are the best times to be trading because there's either an opening of a session, which means like for example, we'll again use the Euro USD. So right now Euro USD, London kill zone. So for me, 1 a.m. Sorry, it's actually 1:24 a.m. Holy. Um, Anyways, yeah, I'm gonna have to go to bed soon. But yeah, 1 a.m. in the morning is when the Euro market opens, which means there's a lot more volume coming in because it's the opening of an exchange, right? So that's usually there's more stuff happening when there's no open or close of a market or there's no overlap. So um, the London and the New York overlap in my time zone at 6 a.m., meaning like the Euro is open right now, the market, and now the the New York exchange is opening at the same time. So then there's like, a flow of orders. The banks are getting more active and they're getting to work and everything, right? So obviously there's going to be, and the same thing when, close time, there's going to be that rush of orders being closed or whatever it is, right? So yeah, that's why these kill zones are relevant. Depending on what you're trading. If you're trading the yen, for example, which is a Japanese, that's going to fit in the Asian kill zone. So you'd want to be trading in that time zone of when the yen uh, market is open, or the Asian session market is open, and all that you can find on this calendar. Quickly show you guys market hours. Here we go. Baby Pips, great site, has a lot. But yeah, you can literally, as I was talking about, you can see there's tons of websites. Excuse me, that just help you nowadays. Volume right now is high, goes low here. So you're depending on your strategy, you're going to want to trade when it's high because that's when price is moving. That's when you can, you know, have a trade happen. We can see here, right here is an overlap. Uh, Overlap here. There's overlap here, which is when a.m. Oh, 3 a.m. 3 a.m. So this is when Tokyo session is closing, and the London is still open. 1 a.m. also big time, high volume. You can see here it's an overlap. Here, big overlap. This one is the New York exchange is now closed, and now it's just Sydney, which doesn't have as much volume. Obviously, the U.S. market moves everything else. Ultimately, it's the biggest one in the world. Here we go, 6 p.m. Sydney. So this, if you're trading, in this example, would be odd and yen, which would be odd versus JPY. This is something that doesn't move as much. You're just gonna still see it move, but it versus like something like Euro USD is probably not going to move as much. Okay, hopefully that makes sense. Let's continue this fair value gap. This is similar to fair value gap. This is just like we can see here on the candles. It's just an imbalance in volume. This one's a gap. Usually you don't see this one. This is pretty uncommon, but if you do see this, it is a reason for price to come back. There's a gap. Imagine there's a big gap in price. Like a gap in orders of these banks trading back and forth money. Instant back and forth. They're going to want at some point to come back and grab the money that's left here, right? Or that liquidity, right? So I don't think I'm explaining this like in the best way, but again, you don't have to understand every single little detail of the. If you get the general gist of how the economy works and what moves what, you could be profitable, and you don't need to know like exactly why the algo moves this way and why this bank does this and blah blah blah. All these tiny little details to be a profitable trader. Like for me, oh, like caveman, there's a gap. Price might go there. Like, yeah. We can see here candlesticks moving together, accumulation or consolidation. So price is just like it's literally as the word's saying, it's consolidating at that price. So we can say there's a buildup of liquidity. So either if price is going to continue up, maybe it might come respect that level. We can see here respected it and then moved up, grab some more liquidity. We can see here and now came back, swept this liquidity now, took that liquidity, and then came back. Oh, we swept this liquidity, came back. Okay, whatever. I broke that down horribly. Bear with me. It is getting pretty late, so I'm not doing the best job. But yeah, fair value gaps are BPR here. We can see balanced price range BPR. It's just two fair value gaps or more that are lined up. So pretty straightforward. These are more powerful, obviously, than one fair value gap because it's two of them. Like I'm saying, this is simple. Like it's not that complicated. Caveman style. You can learn this kind of stuff. You don't have to be a genius. Breaker block, liquidity sweep. So price comes up, takes that price. In this example, liquidity run is like price is targeting that area. It's running through it. Offering fair value, blah blah. Flip zones. So yeah, in this example, supply is now becoming demand. Pretty self-explanatory. It's they're just flipping. It's pretty straightforward. In this example, demand then becomes supply. So there's just like it's a stronger area now because something that was resistance is now broken through, and now that's acting as support. Pretty straightforward. Hopefully that makes sense, and you guys can see like somebody like me can understand this stuff. I'm sure you guys can. So uh, let's actually go on the charts, and I'll show you guys how I break this down. I have all this other information as well. Yeah, I'll show this quickly. Actually, wow, we've hit 30 minutes. Okay, I really hope this saves. It's unfortunate I recorded like 30 minutes of me going through it, and it file was corrupted or whatever. So I'm gonna have to refilm this. So yeah, let's do this. I'll try to keep this short and simple, short and sweet. Okay, so right off the bat here, we can see boom, indecision candle and an engulfing candle. So what would this be? An order block. So boom, we're on the daily time frame, uh, and we can see actually this area right here, kind of, is a bit of a support area, right? Because prices, I mean, you could, in this instance, I'd probably say this whole area here. But if you want to narrow it down, this area is a bit of a support area, right? It's reacted off this area a few times. There's liquidity there. So yeah, you could say this is a support. And then this area up here, supply, yeah, because it reacted off this. So it'd be supply or resistance, right? Let's go zoom in here a bit more. So indicators. This is something you guys can use. All that information that or stuff that I was saying, this does it automatically for you. It's an algorithm that does it for you. It's great. I use it all the time. Um, I don't think you should completely rely on it. I mean, if you want to, do whatever you want. But yeah, you just go into indicators, you search up SMC, oh, SMC, and there you go, SMC Lux Algo, and then you select this one. Make sure it's the Lux Algo one. Boom, you have it on your charts. You can turn it on and off. Like we were talking about, break a structure, equal highs. It does all this for you automatically. We're on the high time frame on the daily, so it's doing it based off the daily candles. These daily candles, each wick is a day. That's what's representing here. I know I've said that you can do lines as well. Boom, look at here, lines. You don't want to trade candles? Look at that. You can trade lines. That makes it easier for you. There's all this different stuff that you can do. Area, boom. Uh, I think the thing with candles is it just tells you a bit more of a story of what's going on each wick. Ultimately you're reading something that's going on and you're taking your best guess and prediction on. You're taking a prediction on what you think is going to happen. And like I mentioned, if you're doing a 2 to 1 R, let's just show right off the bat here. With, I mean, I wouldn't do this, but if we're just saying just off this order block, I want to take a trade. Uh, Boom, stop beneath there. What do I need? 2 to 1. This only needs to be, I could do this for a bunch of areas. This only needs to be right 40% of the time of all those trades I'm taking, and I'm making money, right? So there you go. Previous day high, so that marks it up for you. That's the previous day high of the wick, obviously, and then previous day low. It seems like it's approaching. So like I said, these act kind of like areas of interest. Liquidity likes to come and target these areas. So previous day low, it seems like it wants to come down and maybe take this area. It came close to it, but it didn't take it. So yeah, we are on the daily time frame, so let's continue with that. We'll do an analysis, find some other stuff. So fair value gap. All right, right here, boom. This is a bearish signal because it came up to this fair value gap on a daily time frame, uh, and it respected what seems to be. Actually, we could do this exactly with the fib tool right here. This is the fib retracement. So zoom in here. It almost hit 50%. So that's actually a strong signal in it being bearish right now because it's respected this and continued down instead of coming up. We can see here this is a little bit of a volume imbalance. So price might be attracted to come back up here. But right now the trend seems to be bearish. Ultimately, if we zoom out, what's the big picture? It is bullish since Monday, October 4th. It's been going up. If we zoom out even more, we can see it's been bullish since 2022. It has not broken at that low, so it's just continuing. Yeah, as you can see, it has its movements, but overall, it hasn't come down and broke this, so we're still bullish on the higher time frame. Obviously, that's really high time frame. We go here on the weekly, bullish right now, pretty strong uptrend since 20 seconds. But we can see we really zoom out. Doesn't it look kind of like it's on a downtrend? You could, right? So, but right now we're focusing on this area. It's saying on here it's a weak low, so it's telling us the price might want to come down eventually and break that. So I think that might take a while because this all these candlesticks are representing weeks. So if we're on the daily time frame, It's probably want to continue up, in my opinion. But it all depends on news, honestly, on what news is going to come out. Interest rates going up for the U.S. dollar is bullish for it. The rates are right now currently being cut, which means it's bearish for the U.S. dollar. Which uh, there might be some bullish news that is instead it's been pushing up, but now there be some news on the U.S. dollar and positive for the euro that is now pushing it down. Okay, so yeah, so if the U.S. dollar is weak, it means obviously the euro against the U.S., and so the euro is going up. Hopefully that I didn't confuse anybody by that. I know for me that actually took a while to grasp that concept when it's really quite simple. I know we talked about BPRs. That's actually a great example here. This huge candle on the weekly time frame. So this is a significant BPR. Two fair value gaps lined up. Uh, Price came down and respected it, which is a bullish sign, and then pushed back up. So yeah, it's pretty bullish area right here. So supply for sure in this area, or supply demand. So let's go back to the daily. So this is a strong area. I would be surprised without some significant news for it to come and break this area. So it's not crazy to want or think that I would come and trade off this area. Let's go back to the weekly, and I'll show you guys about the fib that I mentioned if you're using higher time frames. So from here, or actually, we're saying weekly. So from here to here, price would have to come all the way down here to be in discount on the weekly time frame. We're talking about daily. Obviously, you can kind of like come up with what areas you're trading off of. It's like the swing high and the swing low. So in this instance, I would say this area is probably the one I would be, that's the order block that we're looking at. So it'd be, we could do the previous month low to the previous month high. That makes sense. For it to tap this order block would actually line up, this higher order block would line up with the golden zone. If you wanted to really play it safe, you could have your stop loss beneath this order block, thinking it's really not going to come down there. And to get the 2 to 1 R, you'd have to be up here. On swings, I'm risking more. I'll show you guys actually an example of that in a sec. But it would also make sense if you were going to do something like this, right? You're getting 5 to 1 R, right? A lot better risk to reward. You only need to be right, I don't know how many times, probably a lot less than the 2 to 1, right? Okay, so yeah, I wanted to show you guys something on gold real quick to continue this, show how trading doesn't need to be all this like trading these low time frames. Yes. So if you would have just invested or traded gold, whatever you want to call it, swing trade in this instance, investing, you could be like, hey, you know what? I know that the U.S. dollar is about to, or the U.S. dollar is most likely going to cut interest rates. There's fear. People don't have as much faith in the U.S. dollar. I think gold is going to continue up. Okay, so you put in my example, I'm going to say $1,000. You put in $1,000, and you're risking $1,000. Okay, so you enter around this area, right here. You enter around this area. Okay, there's just some consolidation. I'm comfortable. It went up here. I think it's gonna break that high and it's gonna continue up. That's what I think, right? That's what you're thinking. I don't think it'll break. You could say something like, I don't think it's gonna break below 19, or you could have even said, I don't think it's gonna break beneath. Well, the entry was 2,000, so let's just say you entered on right here. You see it going up a bit, and you're like, okay, I want to catch that, and it retraced tiny little bit right here. So there you get on that tiny little dip. There you go. Right. You don't think it's going to go beneath 2000. Let's just say you have your stop loss beneath 2000. Boom. Right there. You enter in at around 2000, 2002. Okay. Wow. I apologize. It's really lagging out for me right now. I don't know why I'm struggling. Okay. And then let's drag it all the way up. Price never came back beneath 2000. It's continued up. So if you would have invested $1,000, you would have entered at 2002. It's aggressive entry. And let's say you're only risking, well, right now they count 10,000. So, 1% of that would be, I'm risking 1,000 right here. You'd be risking, hey, worst I lose $1,000 on gold going bearish. I don't think it's going to happen. I think the momentum's there. This trade makes sense to me. I want to buy gold at a discount right now. I see this, like I said, I don't see it breaking back 2000. You're investing in it. Your stop's pretty tight. Usually investors don't have that quite of a tight stop loss, but you're only comfortable risking 1%. So that's your count's 10,000. You're only comfortable risking 1% of that. It's $1,000. You're risking $1,000 to make 23 if you would have held it all that time. How long would it take? Like 6 or 7 months of you sitting on your hands, just waiting for it to do. What are you doing to make 23,000? Risking $1,000? Nothing but sitting on your hands. You just have to be patient. And that's what you're saying with trading. It's just that patience. And showing this example here, like I'm not using all this crazy trading concepts or whatever. It's just, hey, this makes sense to me. I'm going to trade off of a discount. I kind of know what's going on with the economy. That makes sense to me. Boom. That's it. If you're looking at Bitcoin, I'm sure you could find similar patterns with that as well. Like that's how stocks, similar situation. That's investing. That's You could also say that's trading because you're actually using a stop loss. Before I would just blindly trade without a stop loss, being like, if it goes against me, like, oh, whatever, I'll ride it out, right? If you're comfortable doing that, great. I learned the hard way that they can really push it down. They can really push it down. So yeah. Anyways, let's go back to the we're showing off the trading. Oh, oops. So yeah, you can see this looks messy, right? This looks messy. But what I was using is basically what I do is I'm creating an image for myself. I'm charting up, everything that I've already mentioned is stuff that what you're seeing here, like trend lines and um, order blocks and weekly fair value gaps and daily fair value gaps. I'm just going from the higher time frames and going all the way down until I get an image of like, hey, this makes sense to me. This is probably what's going to happen. I have step. Whoa, where did my mouse go? How did I lose my mouse? Okay, that was weird. I have like basically a checklist for people if they want, especially in your beginner phase. I feel like you should just experiment, figure out what happens to you. Right now, I'm on a paper trading account. That's fake money. Experiment, try things out, see what works for you. Use these concepts or whatever you want. But you don't have to do what I do. Like, I'm not saying copy me exactly, but if you want something to copy, go ahead. Like you can copy this strategy. And like I mentioned, I'll actually show and go through my exact steps-to-step strategy. But you can see here, I didn't actually take this. Unfortunately, I had just charted it up. I was like sitting down, watching Netflix, and just because a lot of this is it's tedious work. I'm going from the weekly to all the way sometimes to the 5 minute, and I'm just charting up and drawing these areas and all this stuff, and then I'm creating an image. Okay, this makes sense to me. I think it would maybe come up here and then come down here based off of that, right? You can see here, I was thinking, I never took this because I was like, okay, like right now it's bullish. It doesn't make sense to be trying to take a bearish trade. The news has to come out and whatever. Obviously, if I had been watching the charts and being active, I would have been able to catch a trade like this, and we've already been 2 to 1 on something like this. Personally, because it's a swing, it means the probability of it is going higher. So I'd be willing to risk more of my account, which means I'd probably risk 0.5. I don't ever risk more than like 1%. 1% is like I'm really, really, really confident. Until I gain my confidence right now, I've only been made it a rule to do 0.25 for scalping, even less sometimes, and then zero point 0.5 for bigger trades like for this. Like, because this is off the daily time frame, right? And then I just analyze on the lower time frame. Uh, yeah, so there's a 4-hour BPR, which means two fair value gaps. We got a supply area here. I'm thinking it it most likely will react to this area, but I don't love that how there's all this liquidity above it, like all these fair value gaps, and they're all in the higher time frame. So I do see like the possibility of it getting pushed. So I didn't take it. Um, Without my stop loss being all the way up on this order block. If it really breaks this area, then this is significant. It's definitely not going to want to be bearish anymore, and we're going to actually see it continue up. That's my thesis. So if you're going to put it in scientist terms, you're coming up with a thesis or hypothesis. Hypothesis. Is that right? Hypothesis? I don't know if I said that right, but yeah, basically, yeah, you're coming up with, hey, this is my idea of like what makes sense that should happen. You're predicting, you're taking an estimated guess. That's all really trading is. You never know what's going to happen for sure. You're just taking an estimated guess and hoping that the probability is in your favor, and based on that risk management, you're going to be profitable at the end of the day. So yeah, um, this trade would have happened on Friday, the 6th. So that was last week, Friday. Yeah, definitely. I was not trading that day, actually. I took that day off. I don't remember what happened there, but yeah. Oh, no, I was working that day. So yeah. Yeah, I couldn't trade that day. And yeah, so that's the day that it came up, took that liquidity, and then pushed down. So yeah, I would have. being in a quite a bit of drawdown here, about like 50% of it, because I have this knowing that hey, I thought that it could come all the way up to this area. I would have been safe. And you can see it, it reversed and came and took. Now it's taking this liquidity. We can see here actually on this 4 hour BPR, it's already kind of reacted to it in a bullish sense. If it's going to remain bearish, it's going to probably take that, but who knows, right? Um, I'd have to zoom in more to get a better idea of what's going on. But from what I'm seeing right now, you would say, hey, it's in a bearish trend as of now, and it could continue to push through that. So yeah, well, that makes sense. I would definitely go into more detail. I just don't want to make this video too long. So I want to actually go through all the information I have. Oh, what? Look at this. News came out. Euro could fall if ECB meeting signals October rate cut is possible. Okay, there we go. So there we go. That's more for Euro to fall. So yeah, if Euro starts getting cut too, the interest rates for that start getting cut too, then there's reason for it to get pushed down as well versus the US dollar. Uh, so I think we're done kind of charting that up. Hopefully you guys get the idea. It's really not that complicated. All those concepts I said, you can use this algorithm to kind of see it for yourself. I recommend not solely relying on it. See it for yourself. Test things out. Ultimately, you're going to want to go, or I suggest, you don't have to go from high time frames and then start going lower and lower and create a picture for yourself and experiment a little, take some trades, you know, and yeah, have some fun with it. It is quite boring sometimes. That's why it is nice. Like I get to sit back and I just have a nice, like right now I've been binging Brooklyn Nine-Nine. I have Brooklyn Nine-Nine in the background, and I'm just charting up and creating a visual for myself. And then when it's actually time, so I missed the time frame, but I know that London opens at 1 a.m. I'd make sure, hey, if I'm trading London session, I'm gonna be ready for 1 a.m. to actually be looking out for taking a trade. Right now, I've created an image for myself. I've done the prep, and now it's time to see if I have an opportunity to get involved in the market. Right. So yeah, I would say trading is a lot like I don't know what's a good example. Right off the top of my head, it's kind of like hunting because you're like you're setting a trap. Or I mean you're ah maybe that's not the best analogy. I mean you're doing that prep. You're being patient. You're waiting for price to come to you, which is kind of the trap in this example. And then if the trap gets laid, sometimes traps doesn't work out and they get away, and other times it works out, right? So I guess in that example kind of works. I also it's something to remember and why the trend is so important is like you are a spec. You're a spec in everything. Like I like the example of saying like we try. We're like a the whole damn. Sorry, it's getting late, so I'm really you can tell. Okay, so like the lamb and the wolf analogy, where like we're a lamb and like oh my god, I'm doing such a bad job at explaining this. I have it written down somewhere. So you're dressed up as a no, you're the lamb and you dress up as a wolf. Is basically you trying to take the trend and be on the side of the wolf. Fuck, I don't know if that made sense, but I have it written down somewhere on one of my sheets. So yeah, we'll go through all that stuff now. I'm gonna call it quits here. I really, really hope it saves because I really don't want to have to do that again. All right, so now I'm actually gonna show all the information that I was mentioning. As I said, I do think I might charge for this. It's just all the work that I put into it. I can't. I wish. It just makes sense to try to get something out of it. Yeah, again, I want it to be affordable. I don't want to be a dick and charge a bunch of money. I do think I'll make it affordable, do a sale or something for the first people. But yeah, let's go through it. So as mentioned, I don't follow this to a T anymore, but when I was first starting off, I did, and it worked for me. This is what I made for myself, an exact. I drew this out and everything for myself to follow. Um, I found this is what worked for me. Again, it doesn't have. I'm not saying this is going to work for you, but this is kind of all the concepts that I mentioned, putting it together. This guy, I really recommend, Mete Kaplan. He's mentioned and linked in the trading journal. But yeah, this is his screenshot. If search him up, Meet Kaplan. I'll actually link him because I don't want to be a dick. I'll link him. I'll try. I'll try to remember to link him. But yeah, you could go through all this information. I put it in simple terms for me. Like again, I'm not the smartest guy, so I like to put it as simple as I could. To me, this was pretty straightforward. So we can see here this example. I have all this stuff, the steps. You can checklist it. You know, I'm giving it here. Like if you don't want to purchase it or whatever, if I do make it something that you have to buy, it's all right here. Take a screenshot, go for it. So yeah, or come back and refer to this video, whatever you want. But if you want a copy of it, then yeah. we'll see. We'll see. So there's the strategy. Uh, and then here's all the information. So like again, I've said, guys, you have no idea. So hours and hours and hours of videos. Of just watching stuff, and through everything, this is what I compounded to what made sense to me and what worked. Uh, Ultimately, like I don't use every single one of these things, but this is a list of all those things. I went through a good chunk of them. But yeah, these all the stuff it's explained as well. You know, we have little sentences here sentences to describe them and all that. So yeah, we have some rules here, something that I try to live by. If you follow this and practice it on a demo account, I'm sure you'll find some kind of success. I'm not going to say 100%. I don't, you know, this was made a while ago, but I still have continued to do this. And like mentioned, I've been on a good winning streak. Yeah, it's not a real account, but I've been trading it as one, so I will confidently say I don't think it's complete shit. So again, you only need to be right 60% of the time with a 1-to-1, and only 40% of the time with 2-to-1 R. And the strategy is for a 2-to-1 R most of the time. Sometimes I took a 1-to-1, but I usually at least try to aim for a 2-to-1 R. And a lot of times, like if you're managing it correctly, which I think this does explain, or one of my other documents explain on how to trail something. So that means that you're trying to get the most out of a trade. So in some instance, you know, I'm only aiming for a 2-to-1, but because I managed the trade correctly, I can get a 5-to-1 or even better, right? So again, concepts for Forex, liquidity sway, market structure shift. That's the same thing as change of character, which we've discussed, buy and sell side, fair value gaps. All these things we've discussed. OTE is the same as a fib retracement. OTE is just specific to like the golden zone. So like, you know, in the picture that I showed, it was like 0.38 to 0.68. For me, I like 0.50, 0.68. That's what I'm saying. A lot of this, truly, I'm just trying to give you the tools to find what works for you. You know, you got to test, you got to put the work in. I know, like, oh, I don't want to do it. Like, I don't want to trade. Then invest. Honestly, like, if you were at least investing, that's better than trading. Uh, or sorry, better than trading, better than doing nothing. You know, I just recommend something even with now if I had the money to start investing again, I'd make sure I have stop losses and treated it like a trade by managing it correctly instead of just investing and waiting it for it to do something eventually. Which I mean, hey, sometimes that works, but you know, I risk too much on my position, which really fucked me over. Block setup, OBE. Block setup is kind of just like uh, demand and supply, that kind of thing. OT, order block, breaker block, we discussed, P and D. Yeah, so we have discussed all these. These are areas that I like to have like 2 or 3 of these at least to give me a good entry. Uh, so I usually look for at least these 8 confluences. This comes from another trader that actually I will try my best to remember to link as well. He's called Fawn, uh, Phon. Okay, and we can see, yeah, again, this is my go-to strategy right here. Accumulation. You'll see this very common in price action. Just the way it moves for like anything is accumulation, manipulation, expansion. So it accumulates. You know, it's a buildup of liquidity. It'll come and take some of it, and then it'll continue in whatever direction it wants to go. Uh, or more stretched out version of this is range. So range here. This isn't the greatest example for the RMC, but you can still do it. Range initiates, so it takes some of the liquidity, mitigates, so it comes back into that area. Uh, so it would be like range initiation. This would be the initiation, right? And then continuation. Actually, so I guess this does work. Range, initiation, mitigation, and then continuation. Or yeah, I might not have done that right. It might be hard with this example, but hopefully you get the point as explained here. There's a range. It's taking some of it, coming back into the area that it wants to go, respect, and then goes away from it. So yeah, here these I actually have some examples. My goodness. So accumulate, manipulates, and then expands up. In this instance, we got a range, initiates here, manipulates, and then continues. Range initiates, you know, like I was saying, manipulates back into the area, respects that area, and then continues. So yeah, this price action is pretty common, and I would say it's safe to go through. It's not too complicated for people to understand, and that's what I like to use. So there we go. Lots of information. Hopefully, you guys can slow that down. Uh, if you want to screenshot it or whatever, go ahead. And then I think we have 2 more documents here. So yeah, we've done Forex tech. Okay, trading rules. Here we go. Yeah, so this was my checklist for everything. It doesn't matter what I'm trading. This is what I'm doing. Yeah. So depending on what you're trading, this is the confirmation. So high time frame, if you're looking on the weekly, you want the daily and the 12-hour in this instance to line up with that. Trading the daily as your target, then you're going to want the 8-hour, the 4 hours. So yeah, this is all great stuff. Checklists, all this I have memorized at this point. It doesn't hurt to look back on this, and especially when I go into losing, you're gonna have losing streaks. When you go into a losing streak, to go back to a chart and be more analytical with how you're taking your trading is going to help. So yeah, this is all great rules. It take me forever to just go through every single little thing. So I'm just at your own time, go through it as you want. Surrender. I'll read the things that I have bulleted here. This is like how to trade like a losing streak here and my rules for that. What I'm looking for. When feeling emotional, get it all out. Say the worst you're thinking after you've released it. Analyze it, then forgive. Let go. If you still feel off, this is great. This I recommend to always use. If you still feel off, take the day off. You must be comfortable and confident with trading. Of course, you'll never be perfect, but really analyze if it'd be a good choice to trade. Be honest with yourself. Have the self-awareness. It's huge. Surrender to the market. Do not try to predict the market by allowing yourself to surrender. You're acknowledging you only have control of yourself, which is true. You can't be like it has to happen. Like this is gonna happen. I used to be like, oh, I'm so confident. Like this is gonna happen, and then fuck, when it goes against you, like you're pissed and you're mad. And it's like no, but like it had to do that. Like it only made sense for it. The market is not always going to make sense. Sometimes, like, yeah, it makes sense that it's going to happen, but it doesn't mean like it's going to happen. So, uh, yeah, surrendering to the idea that you're not always going to be right and you're going to have losses and accepting that you're not going to be 100% right it's extremely freeing, and it's the only way, honestly, that you're going to be profitable when it comes to trading, because you're just going to keep getting emotional, and it's going to affect you. Take partial, blah blah. Stop loss and manage to help keep the bulk move. Rarely do trades always. Yeah. So this is true. Honestly, if you're going for higher R to R's, the more important it is to trail. Ultimately, you let your runners run, but sometimes you gotta take what you can get, right? So yeah, here we go. Remember, even if you follow these rules, you're going to have losers. There's nothing wrong with that. Simply take pride and comfort in respecting your plan and rules. So yeah, that's huge. Okay, so we have all that. I think there's a few more things that I'll go through. There's a lot to this, honestly. I have links, economy information, technicals. You can learn a lot more about technicals. Again, this is the guy that I was talking about, Mete Kaplan. Great. He has a paid course, but he does a lot of free content as well. Uh, babypips.com does a great job of just showing you the introduction of Forex and stuff like that. This guy has some good information for free. ICT kill zones, so this shows you what's up with that. Some terms and stuff, so you know the definitions if you want to learn more about ICT and more analytical stuff. Education, more Forex related stuff. I have some images here, some stock related stuff, economy information, like I mentioned. We got videos and music links on YouTube, and whenever you're trading, this is what I would revert. So I have everything in one place. I don't have to go looking on my YouTube and open everything up. I can just be like, okay, I want some peaceful music to listen to. I'm gonna go here on my YouTube, and it has like, I swear I have like 200 songs on here or something. So I'm sure it's enough for people. Win rate calculator, so you can see like, hey, calculate your trades and all that. ACAP, several different calculators. And if you're not okay with one, you should always be checking the news. So here's my news. I use either one of these. Yep, both work well. I have strategies here with step by step. These have worked for me in the past. Um, this is kind of the one that I'm using currently. I don't follow it to an exact T as I used to. But if you're practicing, this is a good base point to like take one of these strategies and just build off of it, or take some off of it, or whatever you want. As a beginner trader, find what works for you. I don't recommend just plainly taking what I have, because it's what worked for me. It's what I made. Uh, I built off of what other people had shown me. So find what works for you. Test it. Don't be so eager to make money. Unfortunately, I went in with that mindset like, hey, I'm getting into trading because I want to make money. You need to first learn, play it smart, please. I'm begging you, please play it smart, play on demo, and then if you are going to get into a live account and you feel comfortable enough and you feel confident in it, don't risk a lot of money. Only risk what you're willing to lose. Okay, please, please don't make the mistakes that I did. We have examples here, so yeah, I made sure I went into detail with everything here. Some more stock information, another checklist. This is checklist for everything that I'm going into in Forex. We have examples here, pictures, we have order blocks, fair value gaps, what I'm looking for, time zones. We can see here that I know I was talking about kill zones. So we have a kill zone on like exactly when you should be entering based on times, when is the best times to be entering based off trading and all that. Uh, Max daily risk, again, manage it how you want, but based on like how I was trading at the time, that was my rule. No more than 1.15, no more than 2 trades per pair. Excuse me. Uh, okay. I'll just quickly go through prep and review. Yeah. So that's fine. Some quick tips that you should always be. This is a daily practice for me. This is true. Your mental capacity is like battery. Don't trade on low battery. Quit when you're too tired, physically or mentally well. Like right now, 100%. I'm not hopping on the charts. So after this, I can already feel like I'm getting that. When you're really tired and you start getting a headache, I'm getting that right now. So I can tell like, yeah, me trading right now would be dumb. Like I'm starting to get foggy minded. I have quotes here to inspire you guys. I'm gonna show. I have a whole document as well. Tons of quotes. I honestly put a lot of work into this, so I don't feel that bad about like trying to charge for it. I wish I could just offer for free, but it would be nice to get a little bit extra. um, and ultimately, I'm gonna, that allows me to put more better content for you guys and work on other stuff that you guys want to do. And I know that I've been focusing less on the trading stuff and more on the psychology stuff. And for me, that's really what I've struggled with. So that's why I'm focusing more on that. And I feel like people really money grab with the technical stuff, and um, there's less like vulnerability when it comes to technical stuff because you're just fully focused on the charts and whatever, and you don't really have to show yourself and be vulnerable. So I know I'm basically what I'm trying to do is, you know, is make the type of content that I would have loved to have in the beginning of my journey. Speaking to my younger self, and hopefully somebody out there finds it useful. And yeah, ultimately, I do want to help people. I don't want to be an asshole and lie and try to make this like a money grabbing scheme or whatever. I am still trying to be a profitable trader. I know there's a lot of guys out there that are now being exposed that they're not even making money trading. They're just making money off their courses and off their YouTube and stuff. So, oh shit. Oh, okay. So this is like years of me just like reading stuff and whatever, and I put it in one document. And there was a lot more to this, but I analyzed kind of the best stuff. Uh, so to be honest, I didn't go completely through this. So maybe there's some quotes that don't make that crazy amount of sense, but it is good. If you guys want to learn some life changing stuff, these are the things that I wrote down that I felt like, hey, I want to look back on that. Like that's something I should remember, right? So flowing with what comes. Yeah, I mean, there's some pretty powerful stuff in here. Hopefully, most of it makes sense. I do think some of the way I quoted it might not be perfect, but I think majority of this is going to be helpful to somebody out there. So there we go. And then here we go, psych trading rules. So I find this document really important as well. This is stuff that I've wished somebody had told me psychology wise. Uh, all good tips. This is basically just a whole several pages of just good tips and stuff that you should be following. Here we go. If your mental game is on your A game, you're trusting your gut, you're confident, you're patient, you're decisive, very relaxed. Tactical skill, clear understanding of context of the market as a whole, clear understanding of correlations with NA, ES, and Dow. So, if you are trading those indices, clear understanding of location, price levels, and where you are on the chart, letting price come to me, seeing trap traders. So, don't be the liquidity. If you don't see the liquidity, you are the liquidity. Some more quotes, some more helpful information. Yeah. Yeah, hopefully you guys find this useful. I think I'm gonna end it there. I'm really feeling the headache now, to be honest. So, uh, yeah, I'm gonna call it quits there. There's more to this, but I showed basically the gist of it. Yeah, hopefully you guys don't feel so. I mean, my hope for this video was to not make trading feel so overwhelming. I know it really can feel that way, and hopefully it feels more approachable. Let me know what you guys want to see, how I can make it better for you guys, and yeah, I want to help you guys on your journey, learn from my mistakes. Uh, so yeah, I'll call it quits there. I feel like my mind's wandering off now, so probably wouldn't be much help in continuing. But yeah, I think I've given the good baby steps or simplicity on how trading can be, and ultimately, look at me. It can't be that complicated again. So yeah, I'm gonna call it quits. Really, thank you guys for watching. Hopefully, this is something that helped you, and thank you for watching. Peace.